exploring the depths of deception, the rise and fall of China's peer-to-peer lending boom. Welcome, fellow explorers. Today, we delve into the fascinating tapestry of global diversity, where unique cultures, languages, and religions interweave. Amid this rich mosaic, a universal trait seems to bind us all: the undeniable allure of selfish greed and the relentless pursuit of resources. Throughout recorded history, individuals have employed deception and fraud to cunningly transfer wealth from one pocket to another. As society evolves, so does the scale and sophistication of financial frauds. Join us on a journey through time to the early to mid-2010s in China, a period hailed as the golden age for the country's technology industry. During this era, the Internet's widespread adoption birthed countless opportunities for entrepreneurs. Among the groundbreaking innovations was the rise of online peer-to-peer lending platforms. These platforms aimed to revolutionize the financial landscape by cutting out traditional banks, allowing individuals to lend and borrow money directly. By 2015, the industry had ballooned to over $200 billion in outstanding loans. However, as the industry soared to unprecedented heights, a sinister truth emerged. In 2016, the house of cards began to crumble when Izhubao, one of the biggest peer-to-peer lending platforms, was exposed as a thinly disguised Ponzi scheme. The fallout was catastrophic. Millions of investors lost their life savings, triggering mass protests and social unrest. In the wake of this financial earthquake, the Chinese government responded with a decisive regulatory crackdown, effectively outlawing the entire peer-to-peer lending industry. The repercussions reverberated across sectors, prompting preemptive measures such as blocking Ant Financial's IPO in 2020 and an outright ban on all cryptocurrencies in 2021. Today, we unravel the layers of China's peer-to-peer lending industry, once hailed as the world's largest fraud. What lessons can we glean from this cautionary tale to safeguard ourselves against similar scams in the future? Join us as we navigate the twists and turns of financial deception, arming ourselves with knowledge to detect and thwart potential scams on the horizon. Unlocking China's financial revolution, the untold story of peer-to-peer lending. Embark on a journey through China's financial landscape, where once state-run banks held sway with the conservative lending approach. Small businesses and individuals with limited credit history found it nearly impossible to secure loans, stifling economic growth. Recognizing the need for change, both the government and private sector yearned to liberalize the financial system and enhance capital availability. Adding to this financial melting pot was China's staggering personal savings rate, dwarfing that of the United States. With an average household savings rate of 45%, compared to a mere 6% in the U.S., there was a surplus of savings yearning for investment. Enter the stage, online peer-to-peer lending, perfectly positioned to cater to this financial ecosystem. Here's how the magic unfolded. Individuals and small businesses created profiles on these platforms, submitting loan applications detailing the amount, purpose, interest rates, and credit history. Savvy investors with excess savings could then peruse these applications, choosing where to lend their money. The first peer-to-peer lending companies emerged in 2010, and their success sparked a wildfire. By 2013, over 500 active platforms dotted the landscape, a number that soared to 3,000 in 2015. The total value of outstanding loans skyrocketed to a staggering $200 billion. Initially, the government welcomed this financial innovation, seeing it as a means to bridge gaps left by traditional banks. The People's Bank of China even released a policy paper in 2013 endorsing peer-to-peer lending. One entrepreneur who seized this opportunity was Ding Ning. In 2014, he founded Izhubao, quickly becoming one of the most successful peer-to-peer lending companies. By 2015, Izhubao had secured over $7 billion in investment from 900,000 individual investors across China. However, behind the fatal Section 8 of success lurked a different truth. Ding Ning, aware of the importance of projecting an image of legitimacy, employed various tactics. Izhubao poured millions into television advertising, strategically securing slots on state-run news channels. Ding Ning himself worked on bolstering his personal image, attending public and social events, even managing a photo op with the Cambodian Prime Minister. But the plot thickens. Ding Ning, it seems, had a penchant for connecting with women through a dating platform called Enzo Noble Gathering Circle. These women, including the company's president and public face, Zhong Minutes, lacked relevant experience but became the public faces of Izu Bao. Ding Ning's personal relationships with these women, combined with extravagant gifts, including a $20 million mansion and a $2 million pink diamond, raised eyebrows. As we unravel the mystery of Ding Ning's spending spree, we're left to question, was Izu Bao truly a success, or was there more to this story than meets the eye? Join us as we delve into the intricate web of China's peer-to-peer lending revolution, exploring the dynamics that shaped its rise and the hidden factors that led to its eventual downfall, unveiling the deceptive depths, the rise and fall of China's peer-to-peer lending fiasco. Welcome, curious minds, as we unravel the gripping saga of China's peer-to-peer lending boom turned bust. In a shocking twist, the success story of Izu Bao unfolds as a tale of complete fraud, a Ponzi scheme masterminded by Ding Ning, leaving tens of thousands of investors devastated. As we journey back to December 2015, less than 2 years after Izu Bao's grand entrance, the truth surfaces. Izu Bao never facilitated any loans. It was a cunning Ponzi scheme where new investors' funds were used to repay earlier ones. Ding Ning, the orchestrator of this financial charade, treated the money as his personal piggy bank, funding a lifestyle of opulence. When the house of cards collapsed, protests erupted on the streets. In a raid on Ding Ning's mansion, police discovered tens of millions of dollars in cash and jewelry. Izu Bao's internal records revealed no evidence of actual loans made. Ding Ning was sentenced to life in prison, but the victims, despite authorities clawing back remaining assets, only recouped about 35% of their initial investment. Now, let's dissect the motivations behind running Izu Bao as a Ponzi scheme. Despite the potential advantages of peer-to-peer lending, practical challenges loomed large. The online nature of the platform made it easy for borrowers to fabricate income, identity, and other details. Comprehensive verification akin to traditional banks proved impractical. In a bid to combat fraudulent activities, some platforms adopted harsh tactics like intimidation and blackmail, while others, including Izu Bao, turned to the Ponzi scheme route, offering high yields to investors. This fraudulent wave surged, with an estimated 80% of Chinese peer-to-peer lending platforms engaging in some form of deceit by 2016. The Izu Bao Ponzi scheme acted as a wake-up call for Chinese regulators who had previously maintained a hands-off approach. Investigations were launched, leading to thousands of arrests and the exposure of numerous frauds. The number of peer-to-peer lending platforms dwindled from over 3,000 in 2015 to a few hundred by 2019. In a drastic move, the Chinese government, finding regulation challenging, opted to ban the industry altogether in 2020. A 2019 study by China's Supreme People's Procuratorate highlighted 4 main methods through which fraudulent platforms misled victims: celebrity endorsements, sponsorship of philanthropic events, partnerships with state-owned enterprises, and false claims of regulatory compliance. Drawing parallels across the globe, the script flips to the U.S., where fraudsters employ a similar playbook. FTX, Nikola, and others engage in deceptive practices, using celebrity endorsements and strategic partnerships to create an illusion of legitimacy. As we wrap up this eye-opening journey, we invite you to share your thoughts on China's peer-to-peer lending saga. Was the government's decision to shut it down the right call? Drop your comments below, and remember, the world of finance is a complex web. Stay vigilant, stay informed. Until next time, Project Construct signing out.